Welcome to TradeTheNBA.com. This is John. This report is for the 17th of December. Well, not a whole lot of surprises took place. We were expecting this failed long setup that took place back over here at the 23%. We talked about 2672 as being the short below number. And well, we had suggested that below 35, 26 was going to be the number. It's exactly where we went. What a shock. Go figure. The declining shakeout, not a surprise. Currently we see pre-market action trying to hold that 26 because below that, we'd have to really shrink the chart way back here to start getting an idea of what that means. And so we're talking about going all the way back to, all the way into April earlier. We have some dips, but none of them correspond to dips below the red line. Those had all been filled. We can start to see the last little super legs all the way down at 25.48. So break down below that 26, and I mean, literally, it's sketchy that you're going to get into the 70s. More likely, you're going to come all the way down into the 50s. So I think we're at a really cool inflection point at this particular level, because if the Fed decides not to raise rates, oh my, that will bring us all the way back. I mean, for sure you'll have 2672, but more likely you would move all the way back up to the 50%, and probably rather quickly. So that's the upside pain for shorts in this setup, because from their standpoint, you're looking at now, as long as you're below the 35, that's an easy one to stay short with. Certainly below 26, and you're looking at another 50 points. This wasn't so difficult call even from 70 points ago. So all in all, everything from the original DOC spread that took place really at the beginning of this 50%, but the what was higher than the 68, it was at 2780 range to 79, and we've cascaded all the way since then. It's been pretty clean. It's interesting how the nice up rallies corresponded with our dips below the orange, below the red there, with the crossover of green, and they ended almost exactly as we would expect, where you would have, in this particular case, green made it over cyan, which negated the fact that orange had crossed over until the DOC spread took place at the same time. You had the crossovers with all of the key elements, which didn't happen until literally at that 50% on this one from the beginning here. This setup worked out perfectly because you had both the orange and the cyan cross the green at the exact spot that the green crosses over, and you also had steel corresponding, and that was a perfect one, leading to the last decline. So all in all, market's behaving rather expectedly, despite what some people might think about the volatility of it, and that pretty clean action. The NQ not as bad as the S&P, in fact, held up quite nicely, but you could see it had the dip below, but immediately rejected it. I mean, so it's like you get the long, and then it's like boom, you get your exit signal, literally right at the same spot, and appropriately so, because we faded from there. Now some people will say to me, well, can I short that move? Well, you can if you're at key resistance points. You just have to recognize this, not the full short signal. You would have needed also to have the steel crossover, which fine, it did it, it was like midway into this candle going through, but we knew what the key levels were and where you could be below those. So in that particular case, yes, you expect weakness from this move, and contrary to that, you'd have to defend yourself a little bit. But overall, it's not a bad case when you follow, particularly on a daily situation. When you get intraday, you want a little bit cleaner than that, but we can talk about that when we get to a 5K chart. Relatively speaking, with the euro, still no action despite all the protests, blah, 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 blah. Italy has agreed to a budget that nobody believes they're going to adhere to, so they played nice and everybody's happy, so to speak. But there's a real interesting aspect to that euro trade, because the reality is if the rates in the U.S. don't rise, then there's a huge potential upside for euro action, despite the fact that they have no growth or anything like that. But that's neither here nor there when it comes to some of these trades. Of course, Treasuries has a lot of defensive play in that it's way elevated to what it should be. Oil's not doing anything. A reflection of the power of U.S. production can really influence that dramatically. And of course, the Iranians touting how they can avoid sanctions completely, so that's not a drawdown on the value of the supply that exists, so that gives them much more leeway there. And gold, pulling back just a little bit from that DOC spread that we saw just above the ABM, and that's an indication that maybe people aren't expecting the Fed to continue to tighten. Whew, that gets busy. Let's start over here where the day began, and let me just increase the size of this so that we can get a nice closer look, because I thought I would go over briefly some of the things we looked at. Now, in this particular case, we had the green below the red. We had the opening of the spread between them, which literally creates the alien, already within what was a short snake, which definitely got its support once it crossed over there. That took place right here. So people said, well, how can I follow this setup? Well, in this particular case, a lot of times what we look for is the steel to dip below red. Here, it didn't dip below the red. It just sort of cascaded with it, which means that you really didn't get a cover point until the new buy signal. So that makes it very straightforward. 26.55 and the close 28.26. I mean 26.26. 28. Because we were at 26.55. So beautiful, clean, straightforward, 20 plus points. Boom. You then have the long signal. You can follow that to the next short signal. Didn't draw a little arrow there, but we know that was from the 26, which then you would have wanted to short at 35.50. And this was a short one that only lasted to 28. That happens. You don't get a say in it. Nothing you can do. You ended up with that and the clean buy setup configuration. It's like, okay, boom. Could you have been more defensive and taken dip below the 23 as a stop? Absolutely. Absolutely. No objection to some of those types of plays. Same thing in the day, 26.27. And that one took us all the way to 14, another 13 plus points. And of course, yes, you can go long from the buy signal at 14 and you get your next short signal at 16. So not a whole lot for that one. It did move up a little bit higher than that, but there's not a whole lot you could do. Got up to 22. But c'est la vie. You ended up with an additional short signal. Big short snake. Green was already below red at that particular point. And, you know, this is at 15. So you're thinking, oh my God, where can it go from there? Well, the only number we had from there was what? That's right, the 2600, which we actually dipped below. As you can see, we get down to 98.75, but we also had a 2601. So we had a daily at 2601, you know, kind of a convergence of the two, and a bleed in there. If you were going to take that one long, you can see that ended right about here with the both orange and steel, cyan moving across, green's coming below, and boom, right there. So even if you take the transition from that one, 2607 from there, nothing too spectacular. We started to see a little short snake development with sign below green right at the end of the day. That proceeded, we ended up making new lows on that before it started to turn around intrabar in there. So depending on, it just followed that with the stop, or once it broke below the 23%. Would not be inappropriate once you reach the zero. That's a full zone, so a turnaround in that particular case definitely represents a little bit of a change. We've made it right back to the 13 resistance. You can see we floated right across it and then immediately caved. So I would encourage you to go through and do this, because you can sit there and you can go, okay, boom here, And then the orange, boom, pop right there. You can take that one from the next, and so on and so forth. Likewise from here, bisignal comes in. Green is above cyan, so you have to wait for that to change. And that didn't change to the start of this bar, which is right around the 2613 range. We ended up with the crossover. Of course, now we have steel coming from below red. That's a warning sign that, hey, you could catch support. So if I see that happen with the steel crossing red there, I'm usually looking, hey, am I at a critical Morganacci line? If not, hey, I can be slightly above, but otherwise I get a little bit more defensive and put in a stop, usually the zone away, just to make sure, because what I want to see is a continuation of the spread between the red and the green. The broader that is, the more expectation you have for continuation until you get down to that magic little flip back number that potentially can cause a nice turnaround. In this particular case, you get the closing of the mouth. Right around that 61% right here. So as that closes, the key for that would be to then see the reverse or a break of the zone of red into a lower field. But I think that clearly points out how straightforward following that. Now, I'm sure there's a lot of back and forth in the candles in between, but if you try and play all of that, you get too close to the action and you lose the broader scope of it. Now, if we wanted to look at this from a even broader perspective, I can shrink it down just a fraction. And we can look at this from the fact of the steel not having reset all the way to here, which means that the further back I go, you could follow this from a much bigger short configuration, which took place all the way back here and didn't end until well, just about now. So there are ways to even see this from a much bigger viewpoint. Then we can follow this one backwards all the way back up at the 27s, going higher. Once the last time we got the short setup right here before it resets is, well, all the way down back here. So again, you can even see a broader move even within the 5K chart that helps identify overall trend. More good information to accelerate your trading and improve your entries and exits. Just thought I'd throw that one out there to start the week. It could be nice and volatile with the potentialities of Fed action in that. So we may get the little Christmas rally right before, depending on if they do something special. We'll see if the pressure Trump's putting on Powell to do no more rate hikes has an impact or not. As always, though, trade well, and I will keep putting up relevant charts on the Skype chat, and we'll keep going over these kinds of setups because they're really powerful. Trade well.